90% of traders lose money trading zero DTE options, but here's the truth nobody tells you. It's not because they're bad. It's not because the strategy doesn't work. It's because they're playing the game the wrong way. And here's the crazy part. A lot of them are actually winning trades and still losing money. Yeah, think about that. So how do you win trades and still lose your account? And what are the top traders doing differently? Because once you understand this, everything starts to make sense. I've been trading SPX0 DTE for a while now, and after hundreds of trades, wins and losses, I kept seeing the same mistakes again and again. Not bad strategy, bad decisions, and most losing traders make the same 6 mistakes. The first mistake? Trying to guess where the market will go. Most people think, will price go up or down? But that's the wrong way to think, because in zero DTE, you can be right and still lose money. Yes, really. You guess the move correctly, but still lose. Smart traders don't guess. They think in chances. Instead of asking, where will price go, they ask, is this trade worth the risk? That one change can fix a lot. Let me give you a quick example. Let's say SPX is clearly going up. You buy calls, price goes up. You're right. But the option barely moves, or even loses value. Why? Because of things like time decay or implied volatility dropping. So even though you were right, you still lose money. That's when traders get confused. They think, this market is rigged, but it's not. They just don't understand how the game works. This is where people blow their accounts, taking big risks, selling without protection, going all in because it looks good. That's not trading, that's gambling. One bad trade, and it's over. Every trade should be simple. How much can I lose? How much can I win? If you don't know that, you shouldn't be in the trade. Most people don't think about risk until it hits them. Let's say you take one big trade, risk half your account, and it loses. Now what? Now you need a 100% gain just to get back to where you started. That's why risk control isn't optional, it's survival. This one kills slowly. Even if your strategy works, if you risk too much, you'll still lose everything. I've seen this many times. Someone wins 4 to 5 trades, starts feeling confident, then one big loss, and everything is gone. That's not bad luck. That's bad risk control. And this is where ego kicks in. After a few wins, you start thinking, I figured it out. So you go bigger, more size, more risk. And that's exactly when the market humbles you, fast. This is a big one. You see the market moving and feel like you have to trade, so you jump in, even when it's not a good setup. That's how losses start. Good traders don't trade all the time, they wait, they stay patient, because sometimes doing nothing is the best move. Here's something most people won't tell you. More trades not equal to more money. In fact, the more you trade, the more mistakes you make. One clean trade is better than 10 random ones. Most traders look at indicators, RSI, MACD, lines on charts, but those don't move the market. What really moves price? Big money. Liquidity options activity. That's where the real advantage is. If you ignore that, you're just guessing. Think of the market like this. There are big players moving huge amounts of money. They don't care about your RSI. They care about liquidity. So if you're only looking at indicators, you're reacting late. And this is the biggest problem. Emotions, closing trades too early, holding losers too long, trying to win back losses. This destroys accounts fast. Even a good strategy won't save you if you can't control yourself. This is the cycle most traders get stuck in. Win to feel good, lose to get emotional, trade more to lose more, and it keeps repeating until the account is gone. Breaking this cycle is what separates beginners from professionals. So what do top traders do? They keep it simple. They focus on probability, they manage risk, they don't risk too much, they wait for good setups, they stay calm. Simple but hard to follow. Zero DTE trading is not about guessing the market. It's about putting yourself in a position where you have the advantage. Now imagine this instead. You take fewer trades, but every trade actually makes sense. You know your risk before you enter, so there are no surprises. Price moves against you, and you don't panic because you already planned for it. You're not staring at the chart every second. You're not hoping. You're not guessing. You're just following a plan. And here's the difference most people don't realize. You stop thinking in terms of one trade and start thinking in terms of 100 trades. One trade doesn't matter anymore. A loss doesn't shake you. A win doesn't make you overconfident. Everything becomes neutral, controlled, and over time, your account starts growing steadily, not because you got lucky, but because you stop making the same mistakes, not fast, but consistently. And that's the shift. That's when you go from reacting to the market to actually operating like a trader. That's how real traders win. Quick recap of the 6 mistakes to avoid. Number 1, thinking you can predict the market. Number 2, trading without defined risk. Number 3, bad position sizing. Number 4, overtrading too much. Number 5, ignoring market structure. And number 6, letting emotions control your trades. Remember, avoid these, focus on probability, risk, and discipline. That's how top 0 DTE traders consistently win. If you want to see how this works in real trades, we share everything live. Entries, strikes, risk, all of it. You can message Gex Options Trading on Discord or Telegram and join the free group. And in the next video, I'll show you exactly how I take these trades step by step.